we saw the sell-off. Why the recovery today?
There's a phrase that folks like using, which is dip buying, which we're essentially says Bitcoin hit a threshold at which folks were like, okay, there's no way this is reasonable. But the problem for people who like to do fundamental analysis, and just going back to what Krugman said, is it's very hard to do fundamental analysis on an asset that's been defined by like momentum trading for so long. Our colleague Zeke on the investigations team put out a Businessweek newsletter saying, like, why did Bitcoin fall? Because prices fell. And that can feel like a tautology, but so much of this asset class and this industry has been defined by narrative. And so many of the big spikes up have been driven by like events, right? So, the introduction of crypto ETFs, or the election of President Trump, or then President Trump saying we're going to have a Bitcoin reserve. And we've really been lacking those kinds of narrative-driven, like positive events for the past several months.
Does any of the trade that we're seeing as of late, Stacey, like kind of say to you that, okay, because we've always said, like, what is it still? Does it help kind of tell the picture? Or maybe say, okay, it's just this thing that people like to play around with. Like, whether or not this is going to be so disruptive and really something bigger in terms of our financial system going forward, rather than just a kind of a plaything.
So if you go back to 2024, a phrase that was very popular was people believe in the underlying technology, right? This idea of the blockchain. And actually coming into 2026, that has really become actually mainstreamed in a very different kind of way. You have major Wall Street investment banks saying they're looking into things like tokenization and putting assets on the blockchain. You have a number of different companies, including Stripe, making big bets on stable coins. You have multiple different governments saying this is something that we need to take seriously. So I think there's been this shift in the narrative that the only way to get exposure to this technology is Bitcoin, and now people have many other options. And not all of those options are, you can invest in them through like the straightforward mechanism of I'm going to hold a token. So I think some of this repricing actually reflects the sort of the changing maturity of the market itself, right? You have more ways to play how you might feel about the prospects of this technology than merely buying and holding its largest, most liquid token.
That actually makes a lot of sense.
What surprised me about yesterday's move is, if you think back to sort of the last big decline, it was this cross-asset plunge. In equities, we had the meltdown of FTX, so there was concern about this big player melting down. There was no external event yesterday that was really tied to the plunge. Is that, I know that's happened before in the history of Bitcoin, but it's like that felt a little different because the size of the industry is so much bigger. The market cap of the asset is bigger. Why was there no sort of catalyst?
There's a few things that we're paying attention to. I would say there's been no single explicit catalyst. But there was a similar thing happened a few months back, October, when it was like, oh, like normal Monday, and suddenly you're like, whoa, like why is the screen a sea of red? And at that point we heard, okay, so some people's positions got tripped, and that started a chain of liquidations, right? So like a price was activated and margins got called and people started selling to meet those margins. There have been other times when it's like, actually, there are certain parts of digital assets that are like increasingly correlated with AI. And because, you've had companies that used to be, I'm a Bitcoin miner, now they're like, I'm a data center provider and I'm striking deals with Google because the infrastructure that we have can also power the AI revolution. So when you have, negative sentiment to AI because everybody's like, I need $1 billion of CapEx, like that has a read across effect. So we've moved from an asset class that was positioned as not correlated with anything to an asset class that's actually increasingly correlated with lots of different kinds of things in interesting ways. At the same time that within the asset class itself, you've had this fragmentation into, okay, the most liquid traditional tokens, Bitcoin and Ether and Ripple and so on. Then you have like the stablecoin play. Then you have the most speculative part of the market, the meme coins, the doges, etc. And then you've got the products built on top of those things, like the ETFs, like the strategy, and other types of digital asset treasury. So I think what we're also seeing is having to be much more sophisticated about the niches that we're analyzing, because it's no longer just one story that's driving everything.
So a smarter market, perhaps, is where we're going?
I think that's the hope.
But we're kind of like understanding maybe where there is super potential. right? In terms of growth.
The folks who I've spoken to who are the most bullish and optimistic are also the ones who are, have a kind of sense of irony about it, because they're one of the reasons that stable coins, et cetera, are taking off is because the investment banks, who were supposed to be the enemy, right? Yeah. Right. If you think of going back to the white paper, Bitcoin was invented in rejection of the sovereign state and the traditional financial system. That's really brought a totally different perspective on large chunks of what people are interested in.
Has what Bitcoin has done over the last year killed the narrative that it is digital gold?
According to the gold people, yes.
Well, they are gold people.
I think the idea of it being a safe haven asset has always been a little bit challenging, because it's really tricky to maintain the idea of it being a safe haven asset when it has such high beta performance when people are selling risk. Mm-hmm. So it's okay, if people are selling risk assets and Bitcoin is also going down, it's that doesn't quite qualify as a haven. But I think ideologically, what folks were really talking to is they really wanted this to be something that was removed from other parts of the financial system. And really what we've seen over the past couple of years with, all of these different exchanges and the US really embracing crypto in a very different way is that it's almost become much more institutionalized.